Hello and welcome to StockWise, your go-to podcast for all things finance in the United States. I'm your host, your name, and today we're diving deep into the current financial landscape of the US in 2025. Whether you're a seasoned investor, a beginner, or just someone curious about the economy, this episode has something for you. We'll discuss the latest market trends, investment strategies, key financial indicators, and practical tips to navigate the constantly changing financial landscape. By the end of this episode, you'll understand where the market stands today and how to make smarter financial decisions. So grab your notebook, sit back, and let's get started. To understand where we are, let's first look at the bigger picture. The U.S. economy has shown resilience despite global uncertainties, inflation pressures, and fluctuating interest rates. The Federal Reserve has been active in managing monetary policy, balancing growth with inflation control. Stock markets have been volatile. Technology stocks are leading the recovery while energy and industrial sectors show steady growth. Investors are also increasingly looking at sustainable investments and ESG funds as these sectors gain attention. Let's break down some key indicators. GDP growth. The GDP is growing at a moderate pace of about 2.5% annually. This indicates a stable economy, although not without challenges. Inflation. Inflation has cooled slightly but remains above the historical 2% target. This affects purchasing power and investment decisions. Interest rates. The Fed has kept interest rates moderately high to control inflation, making bonds more attractive and influencing stock valuations. Unemployment. Unemployment remains low at around 3.8%, showing strong job growth and continued consumer spending. For investors, this environment means opportunities in technology, energy, and finance while being cautious in sectors sensitive to interest rate changes. Now, let's discuss strategies that work in this climate. 1. Diversification. Always spread your investments across sectors, asset classes, and even geographies. ETFs are a simple way to achieve broad diversification. 2. Technology and innovation. Tech continues to lead growth, particularly AI, renewable energy, and fintech. Companies investing in AI automation and clean energy are shaping the future and creating strong returns. 3. Dividend stocks. With higher interest rates, dividend-paying stocks are attractive. They offer consistent income plus potential capital appreciation. 4. Bonds and fixed income. Don't ignore bonds. Treasury securities and high-yield bonds provide stability and hedge against equity volatility. 5. Real estate investments. Real estate is a hedge against inflation. REITs, rentals, and commercial properties are viable options. Research location and market trends carefully. 6. Risk management. Know your risk tolerance. Use stop-loss orders, proper position sizing, and regular portfolio rebalancing to reduce risk. Remember, investing is not just about chasing high returns. It's about aligning your strategy with your financial goals, risk tolerance, and market conditions. Understanding financial indicators is crucial for informed investing. 1. Earnings reports. Look at quarterly reports for revenue growth, profit margins, and guidance. Strong earnings indicate potential for growth. 2. Market valuation metrics, P/E, P/B, and PEG ratios help determine if a stock is over or undervalued. 3. Economic indicators, CPI, unemployment, consumer confidence, and manufacturing indices guide investment decisions. 4. Technical analysis, charts, moving averages, and momentum indicators help identify short-term trends and entry points. 5. News and global events, policy changes, geopolitical events, and global market shifts affect U.S. finance. Staying informed is vital. Pro tip: combining fundamental and technical analysis gives a complete view, reducing risk and increasing the probability of success. Start early. Compound interest works best with time. Stay informed. Follow market news, analytics, and newsletters. Automate investments. Use robo-advisors or automated ETFs to maintain consistency without emotional bias. Emergency fund. Keep 3 to 6 months of expenses liquid before aggressive investing. Tax planning. Know capital gains, dividends, and retirement account tax rules. Mindset tip: investing is a marathon, not a sprint. Avoid hype, focus on sustainable strategies, and let your money grow steadily. Thank you for joining StockWise today. I hope this episode gives you practical tools to navigate U.S. financial markets in 2025. Remember, whether you invest in stocks, bonds, or real estate, staying informed, disciplined, and patient is key. If you enjoyed this episode, subscribe to StockWise on your favorite podcast platform. Follow us on social media for updates, tips, and market insights. Until next time, this is your name, reminding you: stay wise, stay informed, and make your money work for you. Thanks for watching StockWise. If you enjoyed this episode, don't forget to subscribe and turn on the notification bell so you won't miss any of our upcoming insights and podcasts. Stay wise, stay invested. See you in the next episode.